We are back with our weekly insights with Doug Walters. Hello, Doug.
Jay.
So before we start, I want to make this clear that we're recording before anything has been announced with the tariffs.
That's right.
And most likely you out there who are listening after that information's been released.
Right.
So, but I think it may still be prudent to talk about chasing shiny objects and the pitfalls that can come with that. And, even if you can predict the future,
Right.
is it really worth it?
Right. Yeah, exactly. So we covered that in Insights this week. Just this idea that, let's take the example of tariffs, right? Let's just dive in. We're a couple hours away. So let's say you did know exactly what was going to happen. And not only did you know exactly what was going to happen, let's say, you knew that, there's going to be an influx of investment in U.S. manufacturing. But then, unemployment goes down, wages go up, prices go up. You know all of these things, and you know that, which industries are going to be impacted positively, which negative, and so you set your portfolio up to take advantage of that. 2 days later, everything changes.
Yeah, right.
Right?
Yeah.
So
Yeah.
the geopolitics begins, countries start talking, things start changing, and now your portfolio is positioned entirely wrong.
Yeah.
So you just can't try to predict these things, even if you think you know what's going to happen.
Yeah, it's really interesting. And the kind of the topic of preparation versus prediction, right? And just knowing that it's going to be volatile no matter what, right? Change is inevitable. Things happen, and just being prepared for that in the long term. And I know we probably sound like on repeat, but I mean, that's the thought behind our whole philosophy here.
Right. Yeah, exactly. If we take last week, for example, so last week we had the latest numbers coming out of latest inflation numbers coming out. So PCE inflation is the one the Fed tends to focus on. They want to see that getting all the way down to 2%. Last week, it was, I guess analysts were hoping or expecting it to be 2.7%, which would have been flat month on month. It bumped up to 2.8. So going in the wrong direction, which the market did not receive well. So stocks declined. If I look at our portfolio, what did best last week? It was gold, which tends to be a hedge against inflation, and it was TIPS, Treasury Inflation Protected Securities, designed specifically to be a hedge against inflation. So it's important, not that we predicted that, but we have a portfolio that's going to benefit from different scenarios, and then the rebalance, of course, takes advantage of those ups and downs.
Yeah, and so, maybe this is the wrong way to look at it, but just as a question, it's not from our philosophy. It's not that we are predicting certain areas. It's just that we're diversified enough that we're hedging our bets against other things going down by things going up or vice versa.
Right. Yeah. Generally, if you think about the long term, you want to benefit from what the market has to offer. So historically, U.S. equities, international equities, they've gone up and they've provided an attractive return. You want to balance the risk in your portfolio by making sure you have the right amount of fixed income and you're getting the return you deserve there. And we add other things in there for diversification benefits. Again, we mentioned TIPS, we mentioned gold within international emerging markets. So you're getting that diversified exposure. You want to make sure you're getting that at a minimum, right? That's our starting point. And then where we add value on top of that is the tactical rebalancing. It's tactical positioning. If we see a big valuation opportunity open up and the evidence suggests to us that now is a good time to be overweight this versus that, then we're going to take advantage of it. But what we're not doing is speculating about what's going to happen in the future.
Yeah, and I think that's great. And so as we look out to the rest of this week, a lot of activities this week, right? We have the jobs report and other things coming out. I know the answer, but what are some of the other things outside of the jobs reports that we'll be keeping an eye on that are coming?
Right. Yeah, it's interesting. We like to talk in Insights about what's coming up, right? The jobs report, an inflation report, whatever it happens to be. we are not, again, making any predictions about what happens here. What we're more interested in, not just the number, but how does the market react? And does that reaction warrant a tactical opportunity for us?
Right.
So, the jobs number in itself, again, I don't have an opinion on what it's going to come out at, but if it is market moving, I want to know if that's opening up an opportunity for us. So that's what we're doing day to day as these various pieces of information come out. Give an example that, one where we don't tend to be interested in. So consumer confidence, right? That's always a big one. The media loves to cover it.
Yeah.
Consumer confidence was really low last week, much lower than expected. Consumer confidence tends to follow the stock market. So as the stock market goes down, so guess what? Confidence goes down.
Yeah, right. That makes sense.
Yeah, that's not helping us.
Right.
Right. But if something comes out like the PC report last week, the inflation report, that surprised on the downside, and that move in the market opens up an opportunity for us, that's what we're watching out for.
So it's a very positive look into the future when we look at these things. It's not, let's predict what that is. It's when it happens, it's going to happen. We don't know which way it's going to happen. But afterwards, if there's opportunity that presents, then we'll take advantage where we can.
Right, exactly.
Yeah, I think that's great. All right, well, thanks, Doug. That's it, and we'll talk to you next week.
All right, thanks, Jay. Take care.
This podcast is for educational and informational purposes only. Please see the full disclosure in our show notes for more information.